Hello, this is the second lesson for chapter 1. Use the accounting equation to analyze transactions. What is the accounting equation? We took that in the previous video. The accounting equation is assets equals liabilities plus equity. So this equation should always be in balance. How do you analyze a transaction? A transaction is any event that affects the financial position of the business and can be measured with faithful representation. So, this event should affect the financial position of the business, which means it should affect what the company has, which is assets, or what the company owes, which is liability, or the company's net worth, which is equity. And it should be measured with faithful representation, which means it should have dollar amounts that can be measured reliably, such as the purchase of a building, a sale of merchandise, and the payment of rent. Now let's see. Is it a transaction? Buying a computer for the office for 2,000 cash. Now, did this event affect my financial position or not? I bought a computer, which is an equipment, it's under assets, and I paid cash, which is also under assets. So, computer increased, cash decreased. And it has a dollar amount, which is $2,000. So it is a transaction. The first one, it is a transaction. Now let's see the second one. Hiring a new employee. We just hired him. So I did not pay any salaries yet. And I don't have any dollar amount. So this is not a transaction. It did not affect my financial position yet. Hope that it's clear. How do you analyze a transaction? Transactions can be analyzed in 3 steps. Step 1, identify the account and account type. So for each transaction, you need to know what are the accounts affected by this transaction. The account type, is it an asset, a liability, or an equity account? Step 2, decide if each account increases or decreases. Step 3, determine if the accounting equation is in balance. So you need to keep your assets equals to liabilities plus equity all the time, before and after each transaction. The accounting equation is assets equals liabilities plus equity. Under equity, we said we have 4 accounts. 2 of them increase my equity, which are capital and revenues. As you can see, both are positive. And 2 of them decrease my equity, which are withdrawals and expenses. These are negative. So they decrease my equity. Transaction analysis for Smart Touch Learning. So we'll start with this example. We're gonna have 9 transactions and we need to analyze them. Analyze them, yani we need to see the effect on the accounting equation. Transaction number 1, owner contribution. Contribution means investment, okay? Investment, so it's capital, okay? Sheena Bright contributes $30,000 cash to start a new business as a sole proprietorship named Smart Touch Learning. Now, as we said, contributes means invests. Invests means it's capital. It's capital. And cash. So I did not contribute equipment or building, or land I contributed cash, which means the business cash has increased. So now the two accounts affected by this transaction are cash and capital. Now for the business, the cash has increased and also the capital will increase my equity, as we said before. So the two accounts affected by this transaction are cash and capital. So the business cash increased, so my assets increased. Capital will always increase my equity because it's positive. So this is my accounting equation. Cash is under assets. So cash under assets, we said it increased. So plus 30,000 under cash. Then under equity we have capital. We said capital increase equity. So it's also plus 30,000. As you can see, the equation still in balance. I increased assets, which is before the equal sign, and I increased the equity, which is after the equal sign. So the equation still in balance. Transaction 2, purchase of land for cash. Smart Touch Learning purchases land for office location, paying cash of $20,000. So purchases land, so this is the first account affected by this transaction. I paid cash. So my cash has decreased of $20,000. So we have two accounts affected by this transaction, which are land and cash. Both are assets. Now land has increased because I purchased land and I paid cash, so my cash decreased. So both are assets. So under assets, I'm gonna write cash and land. Cash decreased by 20,000, decrease, so between brackets, which means negative, while for the land it increased, so plus 20,000. So as you can see, both accounts are under assets, are on the same side. Both of them are before the equal sign. So one of them increased, one of them decreased, so my equation is still balanced. Transaction 3, purchase of office supplies on account. Smart Touch Learning buys office supplies on account, which is a liability called accounts payable, agreeing to pay $500 within 30 days. Now, office supplies means stationery, papers, stapler, markers, pencils, okay? So office supplies is an asset account. Now when he says on account means I did not pay cash on spot, okay? ما دفعت cash, which means I'm gonna pay later. On account means accounts payable if I'm gonna pay later, or accounts receivable if I'm gonna receive money later. So in this transaction, I bought something, so I'm gonna pay in the future. I'm not gonna receive money in the future. So it's gonna be accounts payable as mentioned here. It's a liability account. So supplies, it's an asset account. I bought supplies, so my assets increased. And also my debts, my liabilities increased because I did not pay cash. So I'm gonna pay in the future. So supplies under assets increased, so I'm gonna increase it by 500. And accounts payable under liabilities also increased by 500. Again, my equation is in balance because supplies before the equal sign, and liabilities, which is account payable after the equal sign. So my equation is still in balance. Transaction 4, earning of service revenue for cash. Smart Touch Learning earns service revenue by providing training services for clients. So this is our source of revenue by providing training services. So I'm a service company, I'm just providing a service. The business earns $5,500 of revenue and collects this amount in cash. So when he says the business earns $5,500 of revenue, it means I provided this service. So I need to record what? I need to record revenue, which is under equity, and collects this amount in cash. So I collected cash, so my cash increased. Cash is under assets, revenue is under equity. So I received cash, or I collected cash, so my cash increased, my assets increased. Service revenue will always increase my equity. So under assets, I'm gonna write cash. I'm gonna write positive 5,500, and for the equity I'm gonna write service revenue, and also it's positive 5,500. Transaction 5, earning of service revenue on account. As we said before, on account means accounts payable if I'm gonna pay in the future, or accounts receivable if I'm gonna receive the money later. Now, Smart Touch Learning performs a service for clients who do not pay immediately. The clients promise to pay $3,000 within 1 month. This promise is an asset called accounts receivable. Okay, so again, my company performs a service for clients who do not pay immediately. Okay, so I provided the service. Since we provided the service, so I need to record revenue, which means the revenue is earned. I provided the service, so I need to receive my money. If he said I'm not gonna receive it on spot, as he said here, the client will not pay immediately, so I'm not gonna receive the money. Okay, I'm not the client, I'm the company. Now the clients promised to pay $3,000 within 1 month, so I'm gonna receive my money within 1 month, which is accounts receivable. It's an asset account. Now accounts receivable will increase because I'm gonna receive the cash later. Once it's received, the accounts receivable will go down, but now you are creating the receivables, so you are creating this account, so you should increase it. And service revenue will always increase my equity. So under assets, I'm gonna write accounts receivable, and it's positive 3,000. And under equity, I'm gonna write service revenue, and again it will always increase my equity, so plus 3,000. As you can see, accounts receivable before the equal sign and service revenue after the equal sign, so they should go in the same direction. They will go up or they will go down together, but if both accounts are under one side, they will go with the opposite directions to keep the equation balanced. Transaction 6, payment of expenses with cash. Smart Touch Learning pays $3,200 in cash expenses, $2,000 for office rent, and $1,200 for employee salaries. So pays cash, so cash will go down. I'm paying, I'm not receiving, and I paid cash for expenses under equity. Expenses decrease my equity. So I paid cash, so my cash will go down, and expenses will always decrease my equity. So under assets, I'm gonna write cash. It's negative because I'm paying. I paid a total of 3,200. And under owner's equity, I need to write the expenses accounts, which are rent expense and salaries expense. And both decrease equity. So rent expense will decrease equity by 2,000, and salaries expense will decrease equity by 1,200. So as you can see, the equation still balanced. Under assets, it decreased by 3,200, and under equity, it decreased also by the total, which is 3,200. Transaction 7, payment on account. Accounts payable. Smart Touch Learning pays 300 to the store from which it purchased office supplies in transaction 3. So in transaction 3, if you go back to transaction 3, I bought office supplies on account. I did not pay cash on spot. I told them I'm gonna pay later. So now I'm not buying supplies again. I'm paying my debts. I'm paying. So since he said pays, it means cash decreased. Now the second account affected by this transaction is not supplies. I did not buy supplies again. It's account payable. I'm gonna pay my debts. So cash, it's an asset account. I paid, so it decreased. Accounts payable, my debts will also decrease because I'm paying them. So under assets, I'm gonna write cash. It's negative 300, and under liabilities, I'm gonna write accounts payable negative 300. Again, my equation is balanced. Transaction 8, collection on account, accounts receivable. Smart Touch Learning now collects 2,000 from the client from transaction 5. In transaction 5, I provided service for a client and I did not receive my cash. He said I'm gonna pay within 1 month. So we recorded that as accounts receivable. Now I'm gonna collect my money. So what are the accounts affected by this transaction? Let's see. Collects means cash increased. Okay. And I collected from the client in transaction 5, so it's accounts receivable. So both accounts are assets. Cash and accounts receivable are assets. So I collected cash, so my cash will go up and my accounts receivable balance will go down because I received from this client the money, so his balance will decrease. So under assets, I'm gonna write cash and accounts receivable. As you can see, both are under assets, so they should go with the opposite directions. So cash will go up by 2,000 while accounts receivable will go down by 2,000 to keep the equation balanced. Last transaction will be transaction 9, owner withdrawal of cash. Sheena Bright withdraws $5,000 cash from the business. Now, withdraws means withdrawal. As we said before, it's under equity and it will always decrease your equity. And cash is the second account for this transaction. So Sheena Bright, which is the owner, withdraws 5,000 cash to purchase something personal. So she took from the business cash. So cash will go down. Withdrawal will always decrease my equity. So under assets, cash will go down because the business cash has decreased. So negative 5,000. And under equity, under withdrawals, okay, it will also decrease by 5,000. Equity will decrease by 5,000. Now the equation is balanced. Now, these are the 9 transactions that we did, okay? So at the end, we need to find the balance for each account. So under assets, we use only 4 accounts for the 9 transactions, which are cash, accounts receivable, supplies, and land. So you need to find the balance at the end for each account. Under liabilities, you had only 1 account, which is accounts payable. Also, you need to find the balance. Under equity, we have 4 main accounts, which are capital, then withdrawals, then plus revenues, less expenses. So in this question, we had 2 expenses. So both decrease equity, rent and salaries. Again, you need to find the balance for each column, for each account. Then you need to check, is your equation balanced or not? Is your total assets equal to liabilities plus equity or not? So as you can see, the equation is balanced. My assets equals my liabilities plus equity. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.